The Dow slides over 1,100 points or over 3.5% following hawkish indications from the US Fed. Indian equities slip in sympathy but seem more resilient ahead of the F&O expiry today. Metals, financials and realty are the big drags. The rupee sinks to a historic low of 85 to $1 after a sharp rally in the greenback overnight on expectation of fewer rate cuts in 2025. The rupee had breached 84 just 2 months ago. Gold and silver see sharp drops overnight as dollar surges. Base metals too take a knock with copper at a 3-month low and aluminium and zinc hitting lows for the month. No positive cues from China ahead of the gloom. Asian Paint sees 2 sales and marketing executives depart at one go immediately after their resignations in an unusual development. The company replaces the 2 senior personnel with internal candidates. SEBI tightens criteria for SME IPO to safeguard the interest of investors. It also sets new turf rules for merchant bankers and expands the span of unpublished price-sensitive information to curb insider trading. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A dull day coming in for the markets. Nifty, not any sort of a recovery that we're seeing, just slight, but from the day's lowest point. 23,895 around that level was the low. So we have recovered from that low, but yes, 23,895 to 23,969. So some bit of a recovery over there. But since then, we were just managing to hold on to those levels, not managing to come past and hold past the 24,000 mark for the Nifty. Nifty Bank 2 is as of now down almost 500 points in trade, down almost 1% is what we are watching out for. Mid and small cap today, that's also fallen in trade, but not as much as the benchmark indices. It's down only 0.5% in trade, the Nifty mid cap as well as the small cap. Let's look at some of the green that we're seeing coming on the screen is only from the pharma side. Nifty Pharma is the only sector that is managing to hold on to the green. While on the flip side, what we have is drags coming in from Nifty Metal, IT, clearly the top sectoral losers that we're seeing coming in today's trading session. We had a listing also today, IKS Health, that's seen a bumper listing coming in today. 43% premium is what it's listed at, holding around those levels over there. So yes, interesting day coming in for the markets. We have something like a Keynes Technology that's also managing to hold on to gains in this week market in the broader market fund. So let's watch out for that. But moving on and starting the show and focusing on the top news story of the day. Now, the Federal Reserve cuts interest rate by 25 basis points last night. Now, this move was something that was widely expected by the market. However, the chairman, Jerome Powell, indicated that there would be fewer cuts in 2025. The news of only 2 rate cuts in 2025 versus a consensus expectation of 3 rate cuts is something that weighed on the market worldwide. Let's in fact listen in to what Jerome Powell, the Fed chair, had to say on the policy restrictiveness and the central bank's rate cuts outlook for the next year.
We are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. Today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And That's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Okay, let's also listen into how market experts and economists reacted to the Federal Reserve's decision. Here's a bite.
Coming into this, it was clear that the Fed should be thinking about pausing, and I think he made it clear that that's what's on their mind. The dot plot showed half as much reductions next year as the former dot plot did, which is exactly right. I thought something significant he said was that they have reduced the degree of restrictiveness quite a bit. And I think that's important because I think that's kind of where their mindset is. So I think they're still in a good position here. I think the markets are reacting in a way that's kind of interesting because this was, I think, pretty well expected. But maybe it emphasizes that there is still a lot of uncertainty out there about the economy for next year, including what fiscal policy actions we're going to see.
Yeah, I think they did the right thing. I actually also thought that there was only going to be 2 cuts. I thought the market was overly optimistic about holding to 3. So I'm not surprised at the sell-off. And actually, I think it's healthy because I think this market was sort of in almost a runaway situation, and particularly with the Mag 7 stocks. And I think this brought them to reality that we are just not going to get as low interest rates as we thought we were going to get last summer and fall when the Fed began its cycle of lowering rates.
What we saw from Chair Powell today is a bit more cautiousness on the outlook related to inflation. Some of that is due to stronger inflation that we've seen in some recent prints, but probably more broadly underneath the surface, it's more some anticipation of some potential upside inflation risk that may come from the second Trump administration. So if inflation continues to move down towards target, and if some of Trump's more inflationary policies are not necessarily put into play, I think you could potentially see even more cuts from the Fed next year. If the Fed stays higher for longer, that's going to create challenges for all of these other central banks to ease policy as much as we expect in our base case.
Okay, on that note, let's just slip into a very short break. But after the break, we'll return and we'll tell you how the rate cut outlook taken by the Federal Reserve has impacted Indian rupee as the currency touches fresh lows today. Stay tuned in. Thanks for staying tuned into Business Lunch on CNBC-TV18. And now let's move on and talk about rupee because that's crossed 85 mark to the dollar. And even as all currencies fall in the face of a sharp rise in dollar following the hawkish talk by the Federal Reserve, Lata is joining in with us to tell us what's happening in the currency market. Good afternoon, Lata. 85 is the rupee is what we're watching out for versus dollar.
We've long been waiting for that 85 mark to be crossed, and it looked like only the Reserve Bank was standing in the way. Finally, with the entire globe almost now depreciating before the dollar, the rupee was allowed to depreciate by the RBI as well. The depreciation across the board in Asia has been between 15 and 75 bips, percentage points, as it were, with Chinese yuan almost touching 7.3, and usually India goes in step because you don't want a Chinese influx of goods into your country. The reason is, of course, that the dollar is strong. Dollar index has crossed 108, 108.1 was what it touched, and everyone was saying even at 107 that it was too high. So this was unexpected. Basically, the market was priced for the Fed reducing the number of cuts from 4 forecast for 2025 to 2. But they somehow expected that the Fed won't be in step with the market, and the Fed will actually announce 3, cutting from 4 to 3. So the fact that the Fed just fell in step with the market and reduced it to 2 is something that the market has been surprised by, and that perhaps explains the higher than expected rise in the dollar and fall in other currencies. Now, the long dollar positions in the market in India seems to have gotten settled in morning trade, and the Reserve Bank didn't have to do much heavy lifting is what dealers tell us. They perhaps were there in the market but did not supply too much, didn't try to stop the depreciation. But now there isn't so much of dollar flows or a demand for dollars anymore. So that 85.07 seems to have been quite a stable point for a better part of the morning trade at least. One must remember that there is a bit of a doubt now over whether the Indian current account trade deficit for November was really as high, because there is a talk that gold may have been overcounted and the import was not $15 billion. That is also adding in favor of the rupee, and the depreciation has not been very sharp in the market. But that is only for the moment. The expectation is that over the quarter, the rupee will gently depreciate towards that 85.50 mark. And for the end of the year, a bunch of brokerages are calling for 87 rupees to the dollar. All that thanks to, of course, expected tariffs and trade disagreements between countries after Jan 20th, when President Trump takes over. I just want to add a word on what's happening in the yield market as well. We've seen the Indian yields, 10-year yield, also rising to about 6.78. Remember, that is a full 10 basis points higher than what the yield was earlier in December. It was 6.67 and now 6.78. That also is because the US yields have gone to 4.5%, something that was not expected. And that again is because the Fed was expected to cut down the number of rate cuts for 2025, but not by so much.
Okay, Lata, thank you so much for that in detailed explanation on rupee, as well as in terms of watching out for yields as well. But let's move on and talk about the Indian story. We have SpiceJet and the aviation space that's in focus today. We've seen it run up in trade. Why? They've settled a dispute with Genesis. Now, this was a dispute they've resolved is around $16 million. What is going to be the settlement here? SpiceJet will be paying Genesis around $6 million in cash, and Genesis will acquire $4 million worth of equity share in SpiceJet at a price of 100 rupees per share. Overall, in the last few months also, we have seen that, SpiceJet has made a lot of effort in terms of clearing a lot of liabilities or settling a lot of cases. Fleet expansion plans is what they've announced as well. What does this mean for the company? This will reduce its financial liabilities, especially this case also. Now, the withdrawal of all ongoing litigations and dispute related to the Genesis matter will be off. So there's nothing on that front. And Genesis will become a stakeholder for the company and obviously will own some stake in SpiceJet. And that will lead to some growth is what everyone is watching out for in terms of highlights, emphasis on more planes, reinforcing confidence among stakeholders regarding a recovery and a strategy that they have in plan. So a lot of news flows and a lot of positive announcements that we've seen coming in for the company since September. And that is what we're keeping an eye out on, that where this will go going forward in terms of liabilities. Maybe listen in from the management at some point of time and get in their comments on this front. But let's move on and moving on to SEBI. Now, in a latest board meeting, the market regulator had approved a series of key measures aimed at protecting investor interest and improving various aspects of market regulations. Yash is joining in with us with the key highlight from this board meeting. Yash.
Well, Vinny, a total of 19 items have received market regulator SEBI's approval in yesterday's board meeting. Three most important, one of them, and the most important out of those three would be the regulations and rather restrictions around how SME IPO market is expected to function. Who can essentially bring out an SME IPO? Any company which has an operating profit of 1 crore or more in the last 2 of the 3 financial years. SEBI has also said that OFS portion in an SME IPO cannot exceed 20% of the issue size. Also, where promoters are wanting to raise money and pay off debt, those kind of things and those kind of issues won't get SEBI's approval. Apart from that, SEBI said that funds from general corporate purposes would be capped at 15% of the offer size or 10 crore rupees, whichever is lower. Also, selling shareholders can't sell more than 50% of their holding through the OFS part. Promoter lock-in in excess of the minimum promoter contribution will be released after 1 year, and the balance 50% after 2 years. Allocation under the NII or HNI category will be through draw of lot method, and also related party transaction norms will be applicable on SMEs as well. There have been certain restrictions which have come on merchant banking activities as well, essentially tightening the regulations with respect to what are the permitted businesses which they can do and what are the businesses out of the permissible limit, which they will have to make a separate brand, separate company, get the respective regulators' approval to sort of do those businesses. Apart from that, market regulator SEBI has also announced certain changes with respect to insider trading regulations, essentially widening the definition of unpublished price-sensitive information. A total of 17 items, new items getting added to that definition of unpublished price-sensitive information, and now disclosures would be required from the management on all those 17 items as well. Apart from that, any new activity happening out of the company, the management of the company will be able to sort of defer the disclosure on that by about 48 hours.
Okay, Yash, thank you so much for the latest update coming in on that front and the key highlights from the board meeting of SEBI. But on that note, we're going to slip into a very short break. And after the break, we'll return and we'll get you the latest updates from the ferry accident in Mumbai that killed 13 people. Stay tuned in. Thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on and get you some national updates. Now, 13 people lost their lives in Mumbai yesterday when a passenger ferry collided with an Indian Navy craft undergoing engine trials and capsized en route to Elephant Islands from a gateway of India. Prime Minister Narendra Modi condoled the deaths and announced an ex gratia payment of around 2 lakh rupees for the next to the kin of the deceased. Moving on, the two-day Bihar Business Connect began in Patna today. The event aims to pitch Bihar as the emerging investment destination in India. Through sessions and site visits, investors can explore opportunities, network with industry leaders, and provide feedback to enhance the state's business environment. The businesses met in particular will focus on textile, leather, food processing, IT, and general manufacturing sectors. And as we wrap up on this edition of Business Lunch on CNBC-TV18, we leave you with some visuals of ace of spinner R. Ashwin returning to Chennai, his residency, after retiring from international cricket.